Welcome to this week's Forex Trading Tips. This week is based on the CFTC CO2 report published on the 7th of the 12th and reflecting traders' positions on the 3rd of the 12th. We will update our trading pairs, and although the volatility has increased somewhat, really no indication from the report this week on any new currency that might become worth trading. The currency we are watching, which of course is the Swiss franc, has really stalled, and we will have a chart at the end of this talk showing our problem with the Swiss franc. We'll move on with our first currency, which will be the New Zealand dollar. As you can see from the position of the large commercials and speculators, there's been a significant reduction in the position of the large commercials in terms of their long trades held. They've dropped nearly 10%, adding 3,000 contracts to the short side. Interestingly, the speculators have added nearly 6,000 long contracts to their position and dropped 3,000 short contracts. When we look at our charts at the end of this discussion, you can see that it looks like there is a trend being established. But this is a difficult time in our trading cycle, and it comes down to when we take profit. Our approach to this is simply to move our stop to about 125 pips behind the current price level. This gives us about 2 trading days with an average true range in this pair of about 50 pips. So it still gives us plenty of room, but does safeguard a very decent profit. There has, of course, been, as I'm sure you will have all noticed, an increase in volatility last week, and really has pushed our New Zealand currency pairs into a nice profit. So, of course, we'd like to protect that, but at the same time, we want our trades, our profitable trades, to run. So we're sort of trying to have our cake and eat it too, but I think this is a sensible approach to protect profit. And there will be obviously charts at the end of this to heighten or to highlight the examples of what we're talking about. The next currency is the Canadian dollar. I think this is basically steady as she goes, although there has been a significant increase in open interest. The commercials have added 12,300 long contracts and added 10,300 short contracts, so a slight increase in their long position. But really, in the terms of percentages, it remains commercials on the short side of nearly 60% and on the long side of 43%. The retail traders hold a significant percentage of contracts in this currency, and they still maintain their long position at 18% on the long side, or 33,000 contracts, and 13% on the short side at 24,000 contracts. I think that this probably reflects only a small change in the position in terms of the Canadian dollar, so this is no cause for alarm, and really would not reflect any decisions about trading this currency. Our first chart this week is the New Zealand dollar, Canadian dollar, and we've chosen to once again publish a Renko chart. I find this very helpful in terms of trend trading once the currency has either bottomed or topped and is now looks like it's becoming established in a trend. I think the Renko charts are very helpful in maintaining your position. As you can see, we did manage to pick the bottom of this currency pair, and our trade has moved nicely into profit. I think a nice support level is probably the 86 cents. So if you were to tuck your stop behind the wick on the Renko brick of about 85.4 cents, that would probably be a safe place. And if the trade does turn around, of course, and take your stop, you can always re-enter when the trend redevelops. But at this stage, we are looking at a 400 pip profit, but of course we expect much more from this pair, and we are not abandoning this trade, although we will move our stop a little tighter on Monday. The next chart this week is the New Zealand dollar, US dollar. As you can see, It too has moved into a nice profit, but of only 300 pips. Once again, we managed to pick the bottom and pick the turn in this currency pair. You can see from the 10 MA that it is now starting to turn up, so this looks like it's establishing a nice little trend. We really only entered this as a swing trade, so we don't expect big profit from this pair, but we will keep the trade running as long as we can and simply move our stop a little tighter. Where volatility again increased in this pair last week, so we're hoping for a better week next week, and if we're taken out on stop, we won't be re-entering this trade. Our final chart this week is the Canadian dollar Swiss franc. We had very strong signals from our pair index with this pair, but elected not to trade it because the divergence of the Swiss franc was suboptimal and it was trading mid-range. As you can see, if you had elected to swing trade this pair, you would have made a nice little profit and 200, maybe 250 pips, but it's not. We did not deem this a particularly safe trading setup, so elected not to take it. This typifies our trading technique where we are highly conservative and only trade when all the signals line up. However, of course, we'll be keeping our eye on the Swiss franc, although it seems to have stalled at about the 65% level. So until it really moves into the high 70s or 80s, we would not be taking any trades involving this currency. That's it for this week. Unfortunately, of course, there are no currencies on the horizon worth trading in our view. We are hoping for stronger signals next week, and we will obviously keep you updated if we find anything of interest. Our two trades are nicely in profit, and it's up to an individual preference as to when they take that profit. At the moment, it's of the order of 700 pips. We are really happy with 500, and we will be moving our stops much closer. I wish you a happy trading week, and we'll be with you again next week.